Ton of Wisdom presents the series Money Best Practices. Today we look at budgeting. In George Clason's classic book, The Richest Man in Babylon, he states, "What each of us calls our necessary expenses will always grow to equal our income unless we protest to the contrary." Household income or personal income is money received from either a salary or an hourly wage. For a company, income is the profits or earnings of the business. This is the bottom line of the income statement. The top line is sales. When you subtract cost of goods sold and expenses from sales, you get income, the bottom line. It is important that your household income is more than your expenses. Household income minus expenses is your bottom line. You want your bottom line to be positive and not in negative territory. One difference between household income and business income is the tracking of expenses. Household expenses are difficult to track if they are not identified. There are deductions from your gross income. Household income has taxes, healthcare costs, and 401k contributions deducted. Your other household expenses like food or a mortgage are not taken out of your paycheck. Budgeting is knowing your household expenses. It does not mean that you have to penny pinch or worry about every dollar. Budgeting tells you how much is your household burn rate. Basically, what does it cost for you to live monthly and yearly? This is your burn rate. If you are a W-2 employee who gets a paycheck, then you can figure out how much money you net each month. The math is straightforward for you on your pay stub, but your household expenses are a little different. If you use a bank card or checks to pay your bills, then your expenses will be at a line item with a description. For example, paying for electricity or water, you will see the company name for that expense. Most banks have features for you to run reports to see how much money you spend on household expenses. If you are paying for items with cash, then those line items have descriptions as cash withdrawals. This makes it more difficult to track expenses because you don't have a description. Your bank statement will show only cash withdrawal. You will have to take the time to enter each expense into a spreadsheet to identify the cash withdrawals. The point of having a budget is to track how much you spend versus how much your net income is each month. You will find if you are tracking your budget, then you can find areas where you might be spending too much. You might find opportunities where you can save. With providing visibility to your transactions, you can see more of what is happening. It is important to know how much and where you are spending your money each month. Without that insight, you won't be able to make beneficial adjustments. Make sure you subscribe to this video and this channel, and I'll see you in the next video. For more information, head on over to tonofwisdom.com.